you for joining us today for our Year in Review with Axel. My name is Jolene Olson. Outside this webinar, please feel free to email me if you have any questions regarding your membership or the Tech Chart service. You could reach me via the Contact Us link on the website. Thank you very much. Axel, I will pass it over to you.
Thanks, Jolene. Thank you, everyone, for joining today. It's been a great year with Tech Charts. Here's what I've been trying to accomplish with the Tech Charts membership service. Over the past year, I've been trying to offer a new perspective on the wide application of classical charting principles to global equity markets, educating members on the fine points of each classical chart pattern, trying to focus on highly reliable chart patterns and bringing those chart pattern setups to members' attention, applying a consistent way of selecting and highlighting textbook, well-defined and mature chart patterns. Each weekly report starts with a global wrap-up on equity market benchmarks. While doing this, I emphasize the long-term view on global indices with weekly, monthly, and even quarterly charts. It is very easy to get lost in day-to-day volatility. Stepping back and reviewing major trends usually puts things into perspective. Today, I prepared a long presentation. We will go through several great charts, and let's start. So the global equity markets report usually starts with these two major charts. One of them is the iShares MSCI All Country World Index ETF, the one on the left-hand side. And the other one is the iShares MSCI Emerging Markets Index ETF, the one on the right-hand side. So you can see that these two indices, these two global benchmarks, basically have been in a clear, steady uptrend since the beginning of 2016. Earlier there was a correction, and then the uptrend started, and now we're trying to break out of this short-term consolidation. So what we can say here is that when we have a strong uptrend like this, we're more likely to have in the weekly reports and in the research product, we are more likely to have more bullish chart pattern setups versus bearish chart pattern setups, because a rising tide usually lifts almost all the boats. So here's a table that I prepared. The above table shows, this table shows chart patterns that either reach their price targets or their subjective chart pattern negation levels. There are still breakouts that have unmet price targets, and these are not included in the table. As a reminder, all breakouts are recorded under breakouts page on TechChart's website. So you can see that these bearish chart patterns in a rising market have been relatively less compared to other chart patterns, and have been less reliable because of the global trend. If you look at descending triangle as a continuation, there was very few chart patterns developing. Descending triangle reversal, again, very few chart patterns developing. Head and shoulder continuation, bearish in a downtrend, again, very few chart patterns developed during a strong, steady uptrend. Unless we dig deep, of course, we try to find some chart setups that are clearly bearish, that went completely against the global indices. There are few of those, and we tried to highlight those on the website. For example, Hong Kong Lenovo Group has been in a clear downtrend, and the development of this year-long symmetrical triangle was a clear bearish signal, the breakdown, and then the stock reached its chart pattern price target. What was important here is that there was a clear established downtrend. The other one was Italy's Safilo Group. The stock has been in a clear downtrend, and then after this downtrend, the stock in a stair-step fashion, here the breakdown, and then another breakdown reached immediately, to its chart pattern price target. It is possible to find single stocks in a strong market, and those stocks usually have some kind of trouble. Fundamental data might be bad about the stock. So another one, South Africa's Sibanye Gold, broke down a 13-month-long descending triangle, and the stock has been in a clear downtrend. This formed as a continuation pattern and continued its chart pattern price target. So while keeping the overall trend in mind that the stocks have been in a global uptrend, it is also possible to find few ideas that break down and continue to their chart pattern price tags. But these are obviously rare opportunities versus bullish chart pattern setups. Another thing that I have communicated with members over the past year, and I've been more and more selective on this concept, is that chart pattern breakouts from horizontal boundaries have performed better, and these are usually more reliable. On weekly scale price charts, these are easier to identify. And when I see, for example, a horizontal chart pattern boundary that has been tested several times, it clearly shows that the buyers and the sellers have been in a battle around this area. And it clearly shows that once there is a breakout, momentum is likely to kick in, because this will change the demand and supply balance towards the demand side with a possible upside breakout. So that's why when I'm being very selective with horizontal chart patterns, I'm also looking at several tests of chart pattern boundaries before a breakout takes place. So this was also another point that I wanted to discuss. Two charts. Euro Stoxx oil and gas price index was featured in an interim update. You can see that clear horizontal boundary here for this head and shoulder continuation chart pattern. The 330 level was broken on the upside after several tests of the boundary, and we're trending towards chart pattern price target. Another horizontal chart pattern, rectangle, in an uptrend, acts as a continuation chart pattern. This was a stock from France, reached its chart pattern price target. These are some examples to highlight the horizontal chart pattern breakouts. We will go through several other examples in the following slides. Ascending triangle as a continuation chart pattern on the left hand side. Usually you look at these type of chart patterns developing in an uptrend. It's better if we are breaking out to all-time highs. Chart pattern reached and exceeded its chart pattern price target. Another one, horizontal chart pattern that is usually successful is the cup with handle. Cup with handle is a continuation chart pattern. If it is developing in a steady uptrend, it's even better. And you can see that the breakout takes place and price is continuing higher in a steady uptrend. Now, when we look at these chart patterns in the table, you can see that I was able to find more rectangle chart patterns because I believe the reliability of these chart patterns. It's easier to identify on the weekly scale price charts, and you can see that they have performed much better. Now, market conditions can change and these numbers can change. This is just a study on chart pattern reliability from the sample size that we have collected over the past year. If you look at ascending triangle continuation, again, this has a good rate. Ascending triangle continuation is a bullish chart pattern, and in an uptrend, given that the global trend is up, we got more opportunities and more success rate on these ones. Cup with handle, rare opportunities. If you look at head and shoulder continuation, bullish chart pattern, pretty good rate we had. And the reason head and shoulder continuation chart patterns have a better success rate is that usually those are longer term duration. So the longer the chart pattern, the stronger the breakout and the more steady uptrend that follows after that breakout. Now, with chart patterns labeling, we're all familiar with different type of chart patterns. What I'm also adding here is that a 3% threshold for breakout confirmation. This is from the book of Edwards and McGee. We need a level that confirms the breakout. So this is basically a level that we use it as a confirmation, breakout confirmation, a daily close. And I'm providing a level at which the chart pattern will be negated. This is a subjective labeling of a pivot point inside the boundaries of the chart pattern. So if the stock falls below this level, I assume that the chart pattern is morphing into something else, and it's no longer a symmetrical triangle or ascending triangle. As long as price remains above this chart pattern negation level, the secondary attempt above the boundary is still a valid breakout. Still, the chart pattern should be viewed as a symmetrical triangle or ascending triangle. Now, some of the examples of symmetrical triangle breakouts that we have highlighted for members. Bank of New York, Mellon, had a perfect breakout from a symmetrical triangle. Now, while we're going through these chart patterns, I'm going to highlight few qualities that I look for chart pattern breakouts. With symmetrical triangles or with horizontal breakouts, you will see that the chart pattern boundaries are tested 2 or 3 times, and if there is a fourth test, even better. That shows the battle between the buyers and sellers. The general context of chart pattern. For example, if we're looking at a symmetrical triangle and we're going to take the direction on the upside, and we're basically viewing this as a continuation chart pattern, you want to see a steady uptrend prior to the symmetrical triangle. So the general context of the chart pattern will matter when we're analyzing price charts. So this was a symmetrical triangle in a steady uptrend. After the breakout above this horizontal boundary, the stock formed this consolidation, and with a strong weekly breakout, it started trending towards its chart pattern price target. Another one was Baidu in the beginning of the May-June period. Stock had a strong breakout from a 15-month long symmetrical triangle, reached its chart pattern price target. This was already discussed. Lenovo Group stock has been in a steady downtrend. So when you look at a chart pattern like this or a price chart like this, you realize that there's a problem with this stock. So if you're breaking down a consolidation on the downside, that is clear sell signal. The stock, after consolidating sometime in the second half of 2017, reached its chart pattern price target. A stock from UK, Entertainment One, you can see that while looking at symmetrical triangles, still we want to see several tests of chart pattern boundary, and then the breakout is coming, and we reached the chart pattern price target. The longer the duration of the chart pattern, the better it is. Here we have an 8-month long symmetrical triangle from Hong Kong, Sands China Limited. Again, you can see several tests of chart pattern boundary. We're looking at this as a continuation chart pattern, so we would like to see a steady uptrend. So the steady uptrend is defined by these highs connected, and you carry this lower boundary, and it makes a nice parallel trend channel. And surprisingly, the lower boundary of the parallel trend channel and the symmetrical triangle's lower boundary is at the same level. So this clearly shows that there is a demand area there, supported the price, and we went and we broke higher. You can see here that the pullback came back to the lower boundary of the trend channel, but we were still far away from the chart pattern negation level, and the stock picked up and reached its chart pattern price target. John Wiley, another symmetrical triangle. You can see again, even with the symmetrical triangles, how many times the boundaries are being tested, and then when the breakout comes, there is a big momentum following the breakout. Germany, the exchange, perfect symmetrical triangle, several tests of the boundary. After the breakout, we have experienced a pullback, and then we reached our chart pattern price target. Here, another South African company. Look at the symmetrical triangle. It is building in a steady uptrend, so these are the conditions that we're looking for. If symmetrical triangle is going to act as a continuation chart pattern, there has to be a steady uptrend breaking on the upside. Another company from Spain, year-long symmetrical triangle, breaking out several tests. Here the pullback finding support at the long-term moving average, and then the breakout takes us to the chart pattern price target. Symmetrical triangle can act as a bottom reversal. In this case, we need to see a clear downtrend, and after that downtrend, a lengthy consolidation, which would reverse the downward momentum to the upside. So here we had this perfect example, Hong Kong exchanges, a stock from Hong Kong, a lengthy downtrend, and then a 20-month long symmetrical triangle forming, several tests of chart pattern boundary, and a strong breakout. The breakout is followed by a pullback, and then a rally towards the chart pattern price target. Now my favorite chart pattern, rectangle. We have several examples of rectangles. I will go through them quickly, but the common idea is here. Several tests of chart pattern boundary in a nice steady uptrend. So this was a Japanese company, couple of tests, and then the breakout reaching chart pattern price target, 4-month long rectangle. Another one, US company, FedEx. You can see the idea here as acting as a continuation. First, you have a horizontal boundary, the breakout comes, and after the breakout, the stock starts consolidating. And this consolidation forms a clear parallel trend channel. So when we connect these two highs and the lower boundary of this trend channel, you can see that it's finding support at the lower boundary. Several support overlapping at the same area confirms that once we see a breakout, this will clearly act as a continuation chart pattern, and the breakout is followed by a strong price action towards the rectangle chart pattern price target. Here we had a Japanese company. You can see the several tests and a clear uptrend already. 1, 2, 3, the fourth test, hesitating around here, not falling back down, but trying to push higher. So this week we're getting the signal, a pullback to the boundary, and then reaching to the chart pattern price target. So the price action is pretty much the same. Sometimes we see a pullback and sometimes we don't. That is why the best opportunities come when there is a clear breakout signal. Depending on your style, you might wait for a pullback, but when I confirm a breakout opportunity, it's when the trigger 3% daily close takes place. That week, the breakout alert is issued on the website. Another company, another ETF here, Saudi Arabia. Liquidity is not that great. This was a major theme that I have discussed in Saudi Arabia equities. There was a story of an MSCI upgrade pending. So we were seeing several breakouts on individual names, and this ETF that was listed in the US offered a great opportunity. Chart pattern negation level was not reached, and price reached its chart pattern price target. You can call it as a double bottom as well. Another Japanese bank breaking out of a 5-month long rectangle. It has been a choppy ride. Not all price action breaks out and reaches chart pattern price target. It can become choppy, but as long as chart pattern negation level is not reached, I think one should keep it on their radar or in their portfolios and so on. A Peru company, I try to highlight if there is a clear chart pattern breakout signal in emerging markets. It doesn't matter which market it is. We have a wide and diverse follower base. So even if it is Peru or even small emerging markets, these breakouts are highlighted. It's great education and great trading opportunities for some. So the breakout took place and immediately reached its chart pattern price target. You can see here again several tests of chart pattern boundary. And what I like about those type of rectangles is that every time you touch the boundary, you reverse. Touch the boundary and then reverse. Here, there is no major reversal. So the price is sticking to the chart pattern boundary, indicating that this time the stock is ready for a breakout. So this is a major signal for me when price comes to the boundary and sticks to the boundary, preparing for a breakout. This was another US ETF highlighted. First the ETF broke out of a 4-month long symmetrical triangle and then formed the consolidation, which was a 3-month long rectangle, and the breakout immediately followed the next week. Citizen Watch, a Japanese stock, rectangle continuation. Again, after several tests, the stock breaks out and reaches its chart pattern price target. This was a perfect example of the longer the duration of the consolidation, the stronger the breakout, and the more the upside is. Pulte Group, a US company, breaking out of a four-year long rectangle after several tests of the boundary and immediately reaching the chart pattern price target. Those type of good surprises will happen in the long run. These are the type of price actions you would want to capture, and as long as you're going with the selection, with the quality stocks, which means stocks that are forming bullish continuation chart patterns in a steady uptrend, also breaking out to all-time highs after several tests of chart pattern boundary. These are the type of qualities you want to see on a price chart and go for those type of breakouts. The success rate will be higher in the long run. Here's another Swedish company, a clear rectangle chart pattern, 6-month long rectangle. You can see that the rectangle formed in a steady uptrend, and when you connect these two highs and the lows, you can see that this also formed a nice parallel trend channel. So the lower boundary acted as a support breakout, was followed by another consolidation, and the stock reached its chart pattern price target. Turkcell, a Turkish company listed in the US, a short-term consolidation. What I liked about this was while the stock was forming a 4-month long rectangle that can act as a continuation, the stock was also reversing a 2-year long downtrend. So two signals coming at the same time. Here we have another Japanese company. You remember the idea of price sticking to the chart pattern boundary before the breakout takes place. So here is a perfect example, preparation for a breakout. I labeled here. You can see several tests, and this test is not reversing, and basically it's preparing for a breakout, and right after the breakout, another surprise is an upside gaps. When there is momentum in the stock, you can expect any kind of positive surprises, especially stocks that are breaking out all-time highs. All-time highs is, I always mention it, it's the path of least resistance. The stock hasn't traded that in that area. There hasn't been any kind of cost building. So basically the stock doesn't have any resistance. Another stock, rectangle, 6-month long, EFG International, a perfect rectangle, and nicely built above the long-term average. This shows that the trend is reversing after a lengthy downtrend here. So this was the downtrend. First, the stock cleared the 200-day and then started consolidating for 6 months long, and then the breakout took place. Another biotech company in US, you can see the chart pattern boundary. Now, when you're looking at a weekly scale chart, there is no way you can miss a stock that has been consolidating in a well-defined range like this. All you have to do is, once you identify this, put it on your watch list and start keeping an eye on the boundary for a clear breakout signal. if not in a couple of months, in the first quarter or second quarter of the year, the breakout is likely to follow. A French company, you can see the same logic here. 2-year long rectangle breaking out, resistance becomes support, so the stock forms another 4-month long rectangle or flag. The breakout takes place, and then another choppy sideway, and then the stock forms another continuation chart pattern and breaks on the upside. Now, the beauty about long-term and short-term chart patterns is that one can use that for initiating new positions when there are new chart pattern breakouts. Once a stock starts moving in a steady uptrend, it will form several short-term continuation chart patterns. So at that point, the story is not over. Even if it is reaching its chart pattern price target, you start looking for shorter-term consolidations in a steady uptrend. This is one great example for those type of short-term chart patterns. A US company, 9-month long rectangle, ITT Inc., several tests of chart pattern boundary, and this week it's clearing that boundary, and immediately after that the stock is rallying towards chart pattern price target. SkyWest, so 9-month long rectangle, again you can see that there's a clear uptrend here. So what we do is we draw this trend line here, carry it to the lower boundary, and we realize that this is forming a nice trend channel. And in this trend channel, the stock is forming a sideways consolidation. This sell-off finds support at the lower boundary and the lower boundary of the 9-month long rectangle. And the next rally is an indication that the stock is this time preparing for a breakout. The breakout takes place and immediately rallies to the chart pattern price target. General context of the overall stock, it has been in a steady uptrend, and this rectangle is likely to act as a continuation chart pattern. So these are the things that we're looking for. US Woodward Inc., another alert we have placed as a breakout alert, 8-month long rectangle, 1, 2, 3, 4, the 5th time the breakout is taking place and immediately reaching the chart pattern price target. Another Power Shares S&P 500 high beta ETF. You can see again the several tests of chart pattern boundary. The breakout is taking place and taking us to the chart pattern price target. The beauty of rectangles is you can identify the chart pattern boundary, and you know how the stock should behave around this chart pattern boundary. If there has been 3, 4, 5 tests, you know that there has been clear resistance, and if the stock is breaking out strong, it should continue strong. If it is faltering around the chart pattern boundary, you know that something is not right. So that's the beauty about rectangles. That's the beauty about horizontal chart patterns, that it is so well defined that once there is a breakout, it should immediately move to the next level. Here the stock is from a Japanese company, 1, 2, 3, 4 touches, and you can see that here the stock didn't reverse back to the lower boundary. It found support around the boundary, around the upper boundary, preparing for a breakout, and this breakout takes place, and in 2 weeks chart pattern reaches its price target. Here this is Royal Bank of Scotland from London, a shorter duration. I try to look at chart patterns between 4 months and 24 months. When there's a 3-month long rectangle, I also feature those as a possible flag, but the minimum chart pattern duration I take into consideration is a 4-month long chart pattern. So here the rectangle broke out, a pullback, and then immediately reached this chart pattern price target. Here you have Johnson & Johnson. These chart patterns, for those who are joining for the first time for our webinar, are featured at the development stage in a watch list in the report. So right before the breakout takes place, I try to revisit them if it has been a long time that I have featured those charts. But most of these stocks that are alerted as breakouts are not new to the members. So I try to highlight those at the development stage for members to do their own due diligence, because every member have a different approach. You might want to be looking, you might want to look at the fundamentals, you might want to look at the flows, you might want to look at which instruments to use to take this opportunity. So this gives enough time to review those and run your own due diligence. US Columbia Sportswear, a massive 17-month-long rectangle, eventually broke out. Classical chart patterns are defining the boundaries of consolidations, and these consolidations are lengthy periods. These are called trading ranges. So these trading ranges are for traders. Whereas the breakout takes place, it's the trend period. The trend period is for position traders, and it's usually a shorter duration compared to the consolidation. So when we're applying those breakout strategies, we're actually trying to capture that shorter term duration and not the trading range. However, with the report, I try to feature those well-defined consolidation ranges for those members who like to trade the ranges. So this stock has been on our watch list for a long time, and it bounced between 52 and 63 for a long period before the breakout took place. This is another ETF listed in US, an Indian small cap ETF, a perfect rectangle breaking out with a strong weekly bar, pulling back to the chart pattern boundary and reaching its chart pattern price target. Here another rectangle on Google. Stock has been already in a clear uptrend, reached its chart pattern price target in a steady uptrend. This was a perfect breakout after a lengthy consolidation, 18-month long, you name it, rectangle or cup with handle continuation. And the breakout was strong, and stock reached its chart pattern price target in a couple of weeks. You can see that we're consolidating 18-month long, and then immediately the price target is reached in a month or a little bit longer. A stock from Poland, a perfect rectangle in a steady uptrend. Earlier, this stock broke out of a major year-long base. You can see, even if it is a base formation, you can see how many times the stock is testing the boundary. And again, this price action here shows that the stock is not willing to test the lower boundary. Buyers are impatient. They have probably built their positions in funds and so on, and the stock is ready to break out after this consolidation. I call these chart patterns in several reports launching pattern. Launching pattern are shorter term duration chart patterns that break out and complete longer term duration chart patterns. So this was the case here, and the stock formed another consolidation, another short term consolidation in a steady uptrend. And you can see that the lower boundary of this trend channel or trend line supported the price at around the same area as the lower boundary of the rectangle. Breakout took place, and we reached its chart pattern price target. This reminds us of the French company. The breakout took place from a 3-year-long rectangle. Resistance became support, and the stock formed another consolidation. And right after that, another breakout took place. With a slight pullback, the stock jumped higher. As I mentioned before, from these type of breakouts, surprises are usually on the upside, and we can expect gap openings or limit up price movements and strong price action following these type of breakouts. This was another German company. Look at the several times of test, chart pattern boundary test. Here the stock is not reaching to the lower boundary, finding support around here and getting ready in this consolidation to break out higher and reaching the chart pattern price target. Consumer discretionary select sector ETF, 5-month long rectangle, breaking out with a strong price action. Again, here you can see how the stock is trying to consolidate right below the chart pattern boundary before the breakout takes place. That is the preparation for a breakout. This is the type of price action we're looking at when we start putting those rectangles on our watch list. While it is in the watch list, we want to see price challenging the boundaries before reviewing it again. This is a Japanese name. The longer the consolidation, the stronger the breakout. So not only this Japanese name broke out of a 3-year-long rectangle, it also completed a year-long ascending triangle at the same level. The breakout was strong, and it was followed by a strong price action towards the chart pattern price target. This was Credit Suisse, but listed in the US, 10-month long rectangle, also formed as the right shoulder of a 20-month long head and shoulder bottom. So again, the concept of launching pattern. Not only we're completing the 10-month long rectangle, we're also completing the 20-month long head and shoulder bottom. Rectangle reached its chart pattern price target. Another French company, several tests of chart pattern boundary. After this pullback, the stock is ready to break out, tests the boundary again and opens with a gap. Following that, immediately we reach the chart pattern price target. This is a Swiss company, UBS Group. You can see how many times we have tested this boundary. It's like the biotech company in US. Several tests of chart pattern boundary on a weekly scale. You cannot miss those type of consolidations when you're looking at 4 or 5 year long price data on long-term charts. And with TechChart membership service, I'm trying to bring those ideas and also create awareness of those type of developments in global equities. With another US company, Best Buy, several tests of chart pattern boundary breakout takes place. We reach the chart pattern price target. Here we have another US company. The 8-month long rectangle took place in a steady uptrend. We reached the chart pattern price target immediately after the breakout took place. Key Corp, 8-month long rectangle, sideways consolidation breakout takes place, and we reach the chart pattern price target. iShares MSCI Indonesia ETF, in a steady uptrend, we draw this lower boundary, and we realize that the stock consolidates and reaches the lower boundary and the 200-day moving average. So now we know that this is a clear support. So now we're prepared that if this consolidation range breaks on the upside, we have a clear breakout. We have a higher probability setup at this point, and the breakout takes place, taking us to the chart pattern price target. This is iShares MSCI Switzerland. You can see a major base formation here breaking out on the upside, and then we form this consolidation again breaking on the upside, reaching to the chart pattern price target. Here, a Chinese company. Look how the 5-month long rectangle is building with several tests of chart pattern boundary in a steady uptrend above the long-term moving average. This is the setup. This is the consistent setup that we constantly look at to have a higher reliability chart pattern breakout, and then we reach the chart pattern price target. In the long term, the more you focus on these type of chart pattern breakouts, the higher the success rate will be. Saudi Arabia, Saudi British Bank, already in a steady uptrend, and then we built this consolidation 1, 2, 3, 4 tests, and then the breakout takes place. We see a pullback. After the pullback, stocks continues higher. As I said, not everything breaks out and reaches immediately to the chart pattern price target. There are sharp retests or choppy price action until we reach the chart pattern price target, or they might fail and go and reach the chart pattern negation level. We have Hong Kong, China, CITIC Bank Corporation, a steady consolidation, 15-month long rectangle. This week, we reached the chart pattern boundary and we were prepared for a strong breakout, and the breakout immediately followed the next week. A Swiss company listed in the US, a strong breakout from a rectangle. As I said, tight consolidations can break out very strong because there is a lot of energy built in those type of consolidation periods. World Acceptance, another US stock, you can see how nice the trend channel has been, and this consolidation took place in that trend channel above the long-term average, and the breakout took place in 1 week, reaching its chart pattern price target and the upper boundary of the trend channel. Here, this was a recent breakout, ICF International. You can see that this consolidation, 4-month long consolidation, had several tests of chart pattern boundary. Here, a similar consolidation took place in a nice trend channel. So basically, I was looking forward for another breakout in a similar way, and it took place, a pullback, and then we reached chart pattern price target in a short time period. This is another US stock, Teladoc. You can see how many times we tested the upper boundary, and here the stock started consolidating very close to the chart pattern boundary, indicating that it is ready for a breakout. So the breakout came and there was a pullback and the stock resumed higher towards chart pattern price target. A Japanese company, several tests of chart pattern boundary, 6-month long rectangle in a steady uptrend, immediately reaching chart pattern price target. This is an Egyptian company, Citadel Capital. They changed their name recently. There was a clear 5-month long rectangle setting up above the long-term average. The breakout took us to the chart pattern boundary. The stock is now trading at 3 levels. So a common question that I get is, what do you do with a stock that reaches its chart pattern price target? If you're seeing chart pattern price target being met in a short period of time, it is always better to ride part of the idea with a moving average or with a trailing stop, because those type of price actions usually start strong uptrends or strong downtrends. So it is better to follow the trend that follows after those type of breakouts. Hong Kong, Town Gas China, several tests of chart pattern boundary with a strong breakout. Here we formed a symmetrical triangle and reached the chart pattern price target. CTS Corp, the breakout took place after several tests. We were in a steady uptrend, pullback, and we reached the chart pattern price target. Ubisoft Entertainment, a French company, we have featured this. The breakout took place after several tests, couple of days of consolidation, and we immediately reached chart pattern price target. Now we look at head and shoulder bottom as a bullish reversal chart pattern. Rectangles are over. Rectangles was one of my favorite chart pattern. I hope to find more of those setups, because now I hope, after going through several examples, we know what to look for and we know what to expect after a strong breakout. That's what matters in selecting those type of opportunities. This was Hong Kong Industrial and Commercial Bank of China. Here, the stock had a stock dividend at one time 5% dividend. So you have to adjust the chart pattern negation level, because a dividend is immediately paid in your account. So you're basically you have to account for that when the chart is not adjusted on the by the data vendor. US iShares China Large Cap ETF, a clear 20-month long head and shoulder bottom breaking out on the upside. Here we had a minor violation of the chart pattern boundary, but as I mentioned, we were waiting for a 3% breakout. So the level was achieved here in this week, and then the steady uptrend took us all the way to the head and shoulder bottom price target. A Hong Kong company, real estate company, a 2-year long head and shoulder bottom, breaking out, chart pattern negation. This is a subjective level, as I always mention. One could have easily placed the chart pattern negation level at the right shoulder. I tried to place it at a minor low. But with reversal chart patterns, expect choppy price action. What is the logic behind this? Because we're trying to reverse a major downtrend, and the reversal of a major downtrend will take time, and it will not be easy to accumulate all these distributed equities from weak hands to strong hands. So when a stock enters into a strong uptrend, that's because the stocks are being accumulated in strong hands, the funds, the institutional buyers. So this takes time. And obviously, the stock, because it is reversing a major downtrend, will experience a lot of choppy price action because of several resistances that it is meeting at the reversal time. US VF Corp, the stock cleared a 2-year long downtrend. At the same time, it cleared the chart pattern boundary. Strong breakout was followed by price action reaching the head and shoulder bottom price target. Another breakout. So here we have this massive 17-month long head and shoulder bottom on this German company. And you can see that the right shoulder forming as a 5-month long rectangle. So two bullish signals. One is our favorite chart pattern. The other one is another horizontal chart pattern boundary that has been intact for the last 17 months, breaking out on the upside. You can imagine what kind of price action can follow after these type of bullish breakouts. This was US FANG Holdings. The stock was in a clear 4-year long downtrend and formed a 9-month long head and shoulder bottom. For head and shoulder bottoms and head and shoulder tops, these are reversal chart patterns. Reversal chart patterns should appear at the end of major long-term trends. So it is at this point, it's a flashing buy signal because the stock has been in a steady downtrend for 4 years, and now the stock is trying to reverse and also breaking above this 4-year long downtrend. Head and shoulder bottom reached its chart pattern price target. Head and shoulder top. So this stock, WageWorks, was featured in the beginning of 2018. This is a classic example of head and shoulder tops. The stock formed the left shoulder of 18-month long head and shoulder top. Here at this point, we have no clue what the stock is doing. All we know is that the stock is finding support at the long-term average. This rebound takes place and pushes the stock to a high level. Here we form a minor head and shoulder top. This breaks down, breaking down the long-term moving average. So this is our first head and shoulder top signal. And then the stock finds support at the neckline and forms the right shoulder. Pay attention to the right shoulder development. The right shoulder is developing below the long-term average. So these are the perfect chart pattern setups. If we have seen this as a head and shoulder bottom, this was going to be above the long-term moving average. Head and shoulder top, this is below the long-term average. So this week, we are alert that there is a problem with the stock, and we are testing the chart pattern boundary now several times, and we are clearly below the long-term average. And this is a very long weekly candle. And the breakdown that follows clearly shows that there has been some negative news discounted. Ascending triangle is another horizontal chart pattern boundary. This is another favorite of mine. Why is that? The ascending triangle has a bullish bias. The horizontal boundary shows that the sellers are acting at that horizontal boundary, where buyers are bidding the price at every attempt. So this thing could have turned into a rectangle and the price testing this boundary, and then this price coming testing the lower boundary again, but it shows that the buyers are bidding the price at every attempt. So buyers are impatient. So that gives the bullish bias to the ascending triangle. Here we had US Northern Trust breaking out of 5-month long ascending triangle. The stock had a news event that the stock sold off, but it maintained the trend channel, the trend line, and immediately recovered without reaching the chart pattern negation level and reached the chart pattern price target. Here we have Japanese name, ascending triangle 5-month long. 1, 2, 3 tests. The 4th test is taking out the previous highs, and after a hard retest, the stock is reversing and reaching the chart pattern price target. Nasdaq Inc. Several tests of chart pattern boundary, rising lows. Here the stock is not pulling back more and ready for a breakout. The breakout takes place, pulls back, and then reaches the chart pattern price target. Here we had Hong Kong MGM China Holdings, a massive head and shoulder bottom, and the right shoulder forming as a 7-month long ascending triangle. Breakout is taking place strong, a hard retest, breaching the boundary, but immediately reversing and reaching the ascending triangle chart pattern price target. This was another stock that has an interesting story because it's a perfect example of premature breakout and secondary completion. So I have explained this in several blog posts and also reports, weekly reports. The stock tried to break out, but was never confirmed. The breakout was not confirmed. So this dip below the boundary was the last test, basically. And then the stock completed the chart pattern with a strong weekly breakout, which was followed by a steady uptrend towards the chart pattern price target. Norfolk Southern, clear 6-month long ascending triangle, several tests of chart pattern boundary, breakout takes place, pulls back, and then reaches the chart pattern price target. This was a Japanese company, several tests of chart pattern boundary, rising lows, breakout takes place. This time there is no pullback, it immediately reaches the chart pattern price target. As I said, the best opportunity arises when the breakout takes place. Here we have another Hong Kong company, a perfect horizontal boundary. Here the price is sticking to the chart pattern boundary in an attempt to break out. This week the breakout takes place, pulls back and breaches the boundary, but immediately in the following weeks, even though it's a choppy price action, we trend towards the price target. This is another Japanese name, perfect 9-month long ascending triangle breaking out on the upside. Another Japanese bank, perfect breakout, pull back, and then reaches the chart pattern price target. US Ryanair Advanced Materials, perfect 9-month long ascending triangle breaking out, pulling back to the chart pattern boundary, and then reaching the price target. So as you can see, these are taking several weeks, and that is fine because these are the chart patterns that we're focusing. We're not focusing on 1 month long or 2 month long chart patterns. We're trying to capture the longer term trends, the longer term price swings. So that's why it is okay to take for the price to reach the price target few months or even a quarter. This was a Saudi Arabia petrochemical company, a massive 10-month long ascending triangle, and look how many times the chart pattern boundary is tested. The breakout, obviously after several tests, is taking place with a strong weekly breakout and reaching the chart pattern price target. Another Japanese name, 7-month long ascending triangle, breaks out, immediately rallies towards the chart pattern price target. This was a SPDR S&P Oil and Gas Equipment and Services ETF. The ETF formed a head and shoulder bottom and the right shoulder formed a nice ascending triangle with the boundary being tested again several times. The breakout took place, pull back, and then reach the chart pattern price target. And again, here I want to mention that a bottom reversal is clearing the 200-day moving average. So the long-term trend is reversing at this point, and the breakout is taking place above chart pattern boundary and the long-term moving average. So two technical breakouts taking place at the same time. US health equity, this was a recent breakout, ascending triangle, several tests of chart pattern boundary. Ascending triangle is a bullish chart pattern, and when we see it at the bottom, it also indicates that a trend reversal is approaching. So it can act as a bullish reversal chart pattern. Here, this stock from Turkey, it's a beer company. After several tests of chart pattern boundary, and here you can see how the stock consolidated right below the chart pattern boundary, preparing for a breakout. Breakout takes place, pulls back, and reaches chart pattern price target. These are the type of price actions we would like to capture after lengthy consolidations. In these consolidations, we keep those stocks in our watch list, but once the breakout takes place, these are immediately alerted at the breakout alert section. Cup with handle as a continuation pattern. iShares Nasdaq Biotech ETF, a 9-month long cup with handle. The handle is forming as a 3-month long rectangle, breaking out, pull back, and there has been a choppy price action, but we reached the chart pattern price target after almost half a year. And this was on an ETF, 20% upside move. Cup with handle forming this time in a downtrend. So this is, assume it as a reverse cup with handle. So this is the cup, this is the handle. Here again the same chart pattern formed, cup and the handle, breakdown and the breakdown. In a Brazilian company, cup with handle forming in a steady uptrend. Earlier this stock broke out of a symmetrical triangle here, or a pennant, or similar chart patterns. We can now identify the boundaries of this consolidation, and we realize that this cup with handle formed right at the lower boundary of the trend channel. So everything is perfectly fitting in this technical picture. All we needed was a clear breakout, and this breakout takes place here. The stock rallies towards chart pattern price target. Head and shoulder continuation. This is another favorite of mine because head and shoulder continuation has to form in longer term durations, and when these type of chart patterns form, usually breakouts result in strong directional movement. This was a Thailand company, Airports of Thailand, 14-month long head and shoulder continuation, 1, 2, 3. The fourth test is clearing the strong resistance, and the stock is immediately reaching the chart pattern price target. Japanese name, a clear head and shoulder continuation taking place with a strong breakout, reaching the chart pattern price target. A UK company, resources company, a massive 15-month long head and shoulder continuation, taking place with a strong weekly breakout and taking us to the chart pattern price target. A US company, steady uptrend, and once you connect the highs and carry the parallel to create the lower boundary of this trend channel, you realize that this consolidation formed as a head and shoulder continuation and took place in a nice steady uptrend. So the breakout takes place, the stock tests the chart pattern boundary, but it's clearly a hard retest, but finds support at the lower boundary. So the trend is not violated and chart pattern negation level is not reached. So the stock rebounds and reaches the chart pattern price target. And you can see that this whole price action still remains in this 2-year long uptrend. Here we have a Singapore company, Olam International, massive 3-year long head and shoulder bottom, and the right shoulder of that head and shoulder bottom is forming as a year-long head and shoulder continuation. The breakout takes place, obviously, because it has been a very long horizontal resistance. The breakout is taking place with a strong momentum. Clearly shows that the balance between the buyers and sellers have changed, and price immediately reaches chart pattern price target. Here we have an Indian company, not as the other one that we have just viewed. It pulled back to the chart pattern boundary, but nothing has been challenged at this point. The horizontal boundary, which was acting as a resistance, now became support, and also we had this nice trend line finding also supporting the price at the chart pattern boundary. Price rebounded and reached head and shoulder continuation price target. So from the breakout to the chart pattern price target, this is a 6-month period. Even if you see a lengthy consolidation reversing back to the chart pattern boundary, still nothing has changed in terms of the outlook. So the time that is spent during this period for some of us might be a concern, but for me it is not a concern, because the technical outlook still remains positive because of the breakout. This is a perfect long-term breakout, launches, strong, steady uptrends example. US VEX Inc. Several tests of chart pattern boundary, 3-year long head and shoulder continuation, breaking out, slight pullback here without challenging the boundary, and then immediately rallying towards chart pattern price target. Brazil material company, head and shoulder continuation, several tests of pattern boundary, breakout, pullback, reaching the chart pattern price target. You can see that the chart pattern negation levels are placed at a minor low or the right shoulder of the head and shoulder continuation chart pattern. This is a Japanese name, 1, 2, 3, 4. The 5th test is breaking out the chart pattern, pullback, and then continuation on the upside. Breakout to all-time highs from bullish continuation chart patterns are reliable and offer great long-term opportunities. So these are the chart pattern setups that we're always looking for. Hong Kong China Gas Holdings, several tests of boundary, left shoulder, head, right shoulder. The breakout takes place. We reach the chart pattern price target after a short consolidation here. Double top. I think we are reaching to the end of the examples. Italian company. Why do I like this double top? First of all, you have a trend line that is breaking down. You have the lower boundary of this consolidation breaking down, and you're also breaking down the 200-day moving average. So it is a clear 3 signals coming at the same time. The breakdown takes place. The stock consolidates for a couple of weeks and then continues lower to the chart pattern price target. Now I'm going to quickly look at a few ideas that I'm sharing with our members. These are some of the great chart pattern setups that I'm looking at. Now, after going through all these examples, you will be able to realize the qualities that I have searched for on these chart patterns and the reason that I have featured them. The chart on the left-hand side is US International Bank Shares Corp. So the regional banks are strong and they are setting up and breaking out. One of them is just on our watch list and ready for a breakout. It's a 16-month long cup with handle continuation. And the right side, the handle part, formed as a 6-month long rectangle, which I believe is going to be a launching pattern. So you can see that the stock has been steadily consolidating above the long-term average. And we also have this horizontal boundary, well-defined boundary that has been tested several times. And added to this, the stock is ready to break out to all-time highs. So a breakout from this is likely to produce a nice directional movement. Energy stocks are doing well. Here is a major head and shoulder bottom, several tests of chart pattern boundary. We are right at the edge of this neckline, ready to confirm a breakout. These stocks have been highlighted in the previous reports. My favorite chart pattern, again here, rectangles, US listed Europe hedged equity fund is testing the upper boundary for the fourth time now. So a breakout will be a clear signal after several tests of chart pattern boundary. And you can see another chart pattern here, a clear year-long rectangle forming in a steady uptrend. Australia Stock Exchange, this is the 50 index, testing the upper boundary for a potential breakout higher. So those are some of the stocks that I am following right now and sharing with our members. This is the end of our presentation. Now I think we can move to the Q&A session.
Perfect. Thank you, Axel.
Okay, so question one, I understand the need for a breakout to take place on a closing price, but under what conditions would you take a trade based on an intraday breakout? Here's what I'm doing, and I suggest everyone to do the same. I have defined my time frame. My time frame is weekly scale, and I monitor the closing prices on a daily basis, but the closing prices after the market closes. If there is a breakout that is going to take place, I have alerts in place that would alert me before the close of the day. And I monitor my charts at the end of the week. The more involved you become with charts and the price action and the quote screen, the higher the margin of error. So if you're looking at weekly scale charts like this, you can see the percentages or the percent returns that it can generate those type of breakouts. So there is no need to basically lose energy on intraday price actions. That is my humble opinion, and unless you're trading intraday chart patterns, by looking at weekly chart patterns and then going back to daily and then going back to the intraday price action, is not something that I would advise. So question number 2, after 3% breakout confirmation, where is the best place to enter a trade? Is there a rule for buying after a breakout? Okay, what level the breakout is reasonable? What level above the breakout is okay? So let's say you have 10 opportunities, okay? Out of these 10 opportunities, 4 of them are breaking out on the day, and we're looking for a 3% breakout above the resistance. So one of them is already up 7%. The other one is up 4%. The other one is up 10% because there has been a clear buying, and the other one is up 5%. In this case, you have options to choose. There are several opportunities. You're not missing anything. There will be more opportunities the other week, another week, another week. So it is best to go with the best risk profile it will produce for you. So if a stock is breaking out with 5% move and you're just above 2%, 2% above the 3% threshold, and the stock is closing at the end of the day, that could be a good breakout, a good opportunity versus a stock that has already moved 10%. So this is for you to choose between the opportunities that you're monitoring. How do you manage the trade after the breakout? Do you actually advance the stop, especially pullback seems to be happening quite often? This is a trading tactic and everybody should have their own trading tactics implemented depending on their risk profile. There are several things you can do. One of them is using a trailing stop loss. The other one is using a longer term moving average. The other one is setting up the chart pattern negation level, using it as a stop loss and not doing anything between the chart pattern price target and the chart pattern negation level. So these all will depend on the time frame, and other risk parameters that you're following. Okay, FDX, FedEx, does it make sense to enter at the lower boundary of the rectangle? Depends on your trading style. Let's not look at FDX because I don't think I will be able to find that slide, but we can look at this US International Bank share. So you're saying that is it a good idea to enter at this lower boundary of the rectangle, given that this is already forming a cup with handle chart pattern? I like to focus on breakouts, and by going and entering in a stock at this low, we don't know if the stock is going to rebound from there. And to tell you the truth, we don't know if the breakout is going to be successful. So why would you put yourself into a level of unknowns? A stock has to rebound first and then go and break out. So clear that thing and say that if it breaks out, I will go for the breakout signal, knowing that if this thing is breaking out, an expected move would be towards the chart pattern price target. If it is failing, then there is a problem here. But if you're going for the lower boundary of a rectangle before the chart pattern breakout takes place, you have two unknowns. Question 5, do you find that stocks of certain countries chart better, or that some countries have unreliable charts? It's hard to say. It's about efficiency and the amount of market makers and the amount of involvement, I think, that creates more choppy price action. It is possible to find, for example, nice trending stocks in Japanese names. And if you look at a little bit more smaller names, it is possible to find in the US companies also stocks that break out and trend higher. But I don't differentiate stocks with countries. For me, most important is the chart pattern setup. Question 6, regarding chart patterns, what is the entry point and exit point like for rectangular chart? When do I enter the trade? So what I'm featuring on the charts is the 3% breakout level. So we define the resistance, and the stock has to close on a daily basis by a 3% margin above the resistance for a confirmed breakout. It has to close the day. So end of the day, you can look at the price. If there is a breakout, that's a breakout confirmation. And then chart pattern price target is basically calculated by taking the width and adding it to the breakout level. In all the markets you monitor, which are a ton since you look at global equities, about how many quality patterns do you estimate will occur each year? This will depend on the time frame that you're looking at. If you're looking at daily price charts, there will be several opportunities. The failure rates will increase. If you're looking at longer term charts, failure rates will be less, but you will have less opportunities. It will take, for example, 6 months long for this rectangle to develop. But because you're looking at several charts, just to give you an example from this 1 year's breakout alerts that I have featured, there has been 243 breakout charts that broke out. But that doesn't mean that I captured all. I'm sure there are many more that break out. Remember that this is a discretionary method. what I'm trying to do here is not to capture everything, but I'm trying to give an idea of how to look at price charts to the members, and to widen the horizon, that it is not only one single market that you're involved in. There is a wide range of opportunities out there that you can find repeating chart patterns, similar chart patterns in different instruments. So there will be several. If I tell you I found 250, it could be 1,000 breakouts if you're using a wider universe. Question 8, why do you think rectangles work best? Well, rectangles work best because, first of all, when there's a breakout, let's look at the 6-month long rectangle. When there's a breakout, you're taking out the previous highs. Second, it's like the price is like a ping pong ball between the boundaries. So the demand and supply is very well defined. So there's a common discussion that is everybody watching charts? Most probably, a lot of people are paying attention to those charts, and they are able to see those boundaries and they are acting. So for rectangles, those boundaries are very well defined. A naked eye can easily see those boundaries, and a breakout is identified by many. That's why I think rectangles are working best. How does Axel trade world equities? Does he open accounts in multiple countries? Who does Axel recommend for international stocks? I cannot recommend brokers. Several reasons. The most important one is everybody should assess the broker's profile, do their own diligence, and act accordingly. What I suggest is that the first point to start searching is looking for retail prime brokers. So if you Google retail prime brokers, you will find brokerage services that offer global instruments from one platform. We have discussed in previous webinars, there are two major ones that is widely followed. Saxo Bank is one of them. Interactive Brokers is another one widely followed. So companies similar to those that offer global instruments in one platform is what you should be looking for. Okay, question 10. Does Axel use macro analysis at all to find out where to start? Does he use fundamental analysis at all? If yes, before or after a trade chart presents itself? Okay, now this is an important question, because I've written a blog post. There are two types of analysis. One is a top-down approach. The other one is a bottom-up approach. Top-down approach starts with a sector, or starts with a country, starts with the sector, and then starts going down to individual names. For example, you're bullish on energy stocks, and you start looking at energy indices, what stocks there are in those energy indices, and then you start figuring out which company is the strongest in those. What I do is the opposite. I do bottom-up approach. So I collect all this universe in a basket, and I start looking at charts individually, one by one, one by one, one by one. And at the end of this review process, I come up with a bunch of stocks that are looking really nice, that are forming perfect bullish or bearish chart patterns. And then I look at their names. Until this time, I'm not involved with their names because I don't want to be biased. I don't want to be biased with higher energy prices affecting energy stocks on the upside. But if I'm seeing bullish continuation chart patterns, cup with handles, rectangle, bullish continuation rectangles developing on several stocks that are in energy sector, then I have a team that has developed. I know that we are in that cycle, but I don't combine those things together to make a decision. My approach is bottom up. Okay. Question 11. Is Axel still based in Bulgaria? Why did he choose to be based there? Family reasons. when you're involved in financial markets, the most important thing is to make your family happy, so that you have enough time to look at charts. So that was my initial intention, to come to Bulgaria, where my family, my wife's family is from. So that's the reason that I'm based in Bulgaria, which worked well because Bulgaria has a 10% income and corporate tax rate, for those who are interested. So this is a very low tax rate when compared with European standards and global standards.
Good answer. I'm sure your wife is very happy about your decision.
Yeah. Question 12. Does AXA plan to add Forex and futures to its subscription? No, at this point, I'm not planning to add those two instruments. Because there is already a wide range of stocks. What I'm thinking of adding is frontier markets, for those who are interested. Um, I know we have a follower membership base in frontier markets that are very interested to hear more about frontier markets. But for those who cannot trade frontier markets, this would also be a nice educational add value to see how clear chart patterns develop also in those type of markets. I notice all the patterns you show are for buying. Do you ever look at possible short sales? Yes. In the beginning of the presentation, Jolene will compile it and make it a recording, make a recording available, so you can watch it at your convenience. In the beginning of the presentation, you will see some of the chart patterns I featured are short setups, but I also mentioned that because the last 3 years has been a clear uptrend, it was wiser to focus on those chart patterns that are going with the trend, that are basically you're taking the wind with you when you're looking for breakout opportunities. The stock markets, all country world index ETF, emerging market ETF are all in a steady uptrend. Okay, question number 14. I think you're doing a great job with your educational videos. Thank you. What videos do you have planned for this next year? Well, what I'm thinking is we now uploaded several educational videos on individual patterns. So what I'm planning is to share more varieties of those chart patterns. And obviously there will be more Dubai seminar videos made available. And the third one is I'm going to add more videos on fine points of technical analysis that would help members to combine classical chart patterns with some technical analysis, basic technical analysis, like for example, how to construct a nice trend channel in the examples that I have provided before. Or I get a lot of questions about trend lines. A video on this is possibly coming in the next year. Okay, question 15. Do you envision covering any of the cryptocurrencies at some point in the future? It's a possibility. What I will do is this. There are ETNs. I know it's not the same thing, but to give the direction, to give the overall view, I would be covering those that are listed on the exchanges, and if there are more listed instruments becomes available, I would also try to cover those if there are major developments. But I'm looking at major price actions on cryptocurrencies. Okay. Question 16. How do you identify the negation level for the rectangle chart patterns? Let's talk on the 6-month long launching pattern here, US International Bank Shares Corp. Where would you place the chart pattern negation level? a minor low. I would be looking for a minor low. In this case, the minor low will be the low of this weekly bar. Now, if it is not visible on the weekly chart, you can go back to the daily chart and try to see that this move was followed by a correction, and this low would provide as a minor low for a chart pattern negation. Again, remember that this is a subjective level for identifying chart pattern negation levels. With head and shoulders, for example, it's the lowest point of the right shoulder, and you have seen several head and shoulder failures posts in the past. That is why the chart pattern negation level for head and shoulder is very clear, because once you clear the right shoulder, the top of the right shoulder, it's a head and shoulder top failure. So that's the chart pattern negation level. But with the rectangles, somewhere inside the between the boundaries, you try to find a minor low for chart pattern negation. Okay. So this is what I have just discussed. Question 17. Sometimes you draw your boundaries through a candlestick bar, and sometimes you use the actual high or low of candlestick for drawing boundaries. Help me understand why this is so, and how do you know when to draw through a bar? Okay. Let's again. This is one of the good examples, I think. US International Bank shares. So why didn't I take this high? This is one of the not the best example, because it's a clear horizontal boundary. But for example, this lower boundary, let's say this lower boundary, why didn't I take this low? Or why didn't I draw it as a downward sloping line? The reason for that is I'm trying to capture as many data points as possible inside the chart pattern boundaries. So my intention is to find the horizontal boundary. So by doing that, I'm trying to capture the touch points, as many as possible. So that's the logic behind it. Okay, question 18. Can you tell us how you determine your price targets? For example, on the Columbia Sportswear rectangular pattern, you have a price target of $74. How is that determined? With rectangles, you take the width of the chart pattern and add it to the breakout point, rectangles. Cup with handle. This is the cup, the widest point of the chart pattern. You take the boundary, the lowest point, and extend it to the upside in price points to the upside to get the cup with handle price target. Head and shoulder, you take the boundary, neckline, the lowest point of the head, and extend it to the upside for chart pattern price target. Is 2017 numbers a normal year? How does the breakout type of trade fare in sideways markets? In sideways markets, it will be challenging. This is very clear. But because we are focusing on a wide range of markets, there will always be some trending market, either on the upside or on the downside. Now, when we start seeing corrective periods turning into downtrends, these will allow us to find clear chart pattern breakdowns, and we will definitely feature those. We will definitely look at those breakdowns. Descending triangles breaking down, head and shoulder top breaking down, rectangle continuations will start forming in downtrends. We will look at those, we will identify those, hopefully, in different market conditions. Okay, question 20. Can you please shortly explain table from first slide? Okay, this is the, let's go to, I think it was the second. Yeah, all right. So what I have done is, over the past year, we have discussed about so many chart pattern opportunities, chart pattern setting up. Some broke out, some didn't. Some morphed into something else, and then later on broke out. So with the sample size that we have, the chart pattern breakouts, again, as I have mentioned, I might have missed several other chart pattern breakouts. This is just the sample size that I have collected over the past year. These were the breakouts alerted to members, and these were the breakouts that have either reached their chart pattern price target or they reached their chart pattern negation level. However, what you should be looking at on this table is the reliability of each chart pattern. What does this mean? So for example, I always stress the importance of chart pattern breakouts from horizontal boundaries. You will see in this table that so far, with the sample size that we have collected, the horizontal breakouts have performed better. So rectangles that are in an uptrend that acted as a continuation chart pattern have performed good. Head and shoulder continuations in a bullish trend performed well. Head and shoulder bottoms with clear horizontal boundaries breaking out on the upside performed well. Now, I'm not saying that symmetrical triangles performed really bad or poorly. There were several symmetrical triangle examples. 9 of them so far reached their price target. 8 of them reached their chart pattern negation level. But compare this with the rectangle. Obviously, the numbers are much more with rectangle. That's why this is an evolving study, and I hope to compile more data going forward in the several years, and hopefully will become the library of the study on chart pattern reliability. So it will be a go-to place to see the statistics of the chart pattern reliability in the future. So this is the table that is based on the sample size that I have collected over the past year and shared with members. I hope this is clear. Question 21, for actual trades, is there a risk reward minimum you look for, such as 1 to 2 or 1 to 3 risk reward? At this point, I think, again, it will depend on your risk parameters, and this will depend on where you place your stop losses and how you take profits and so on. It will be a trading tactic depending on your risk profile. How often do you expect a test of resistance before a true breakout? Several tests is better, but the fourth time that a stock tests the boundary and breaks out is good enough. And from the experience, I can say that usually third or fourth tests results in a directional movement. Doesn't mean that it doesn't fail, but more likely that more tests are going to give us a stronger breakout. Okay, question 23, how and where to book partial profits? It will again be depending on your trading tactics. Partial profits can be at the chart pattern price target and ride the remaining part with a trailing stop loss or moving average stop loss is the best way to answer this question, because you want to capture the part of the trend also, and you can see that the longer chart patterns are resulting in strong directional movement. So a very basic 20-day or 50-day moving average will keep you in the trend. And partial profits, again, chart pattern price target is a great place, I guess. Any examples of bearish breakouts for bearish market cycles? Well, when the tide turns, when we start experiencing corrective periods, the bearish chart patterns we will be looking at are rectangle continuations in downtrends, descending triangles, a symmetrical triangle as continuation on the downside. You can see 3 examples in the beginning of the presentation. Let me see if I can. For example, this one. Even though the market was in an uptrend, Hong Kong, equities, this stock was in a clear downtrend. So we will see more of those type of price action when markets are in a downtrend. And we will get, instead of 2-3 symmetrical triangle breakdowns on the downside, we will probably get 10 or 15 rectangle breakdowns. So we will have more sample to work with on the downside. How do you calculate negation level? This was answered in the previous questions. I think once the recording is available, you can check the recording, but very quickly place the chart pattern negation level to a minor high or minor low inside the chart pattern boundary. So in this case, for example, Lenovo had a minor high that can act as a chart pattern negation level. This is a subjective level. Chart pattern negation level here, you can place it at the top of the cup's handle. I placed it here because there's a clear bearish trend here, and the stock back to back with weekly breakdowns cleared the boundary. Here you can see that chart pattern negation level was placed at the minor high on this descending triangle. Again, this is to answer are there bearish setups? Yes, there are bearish setups in a strong trending market, strong uptrend markets. There are rare opportunities, but it is possible to find. But when the trend turns to downside, we will have more of these opportunities. Here you can see the chart pattern negation at the minor high. Thanks everyone for joining. Thank you, Jolene.
Thank you, Axel. That was fantastic. If you have any questions, email me. Email us on the website via the Contact Us form, and that email goes straight to Axel or myself, and we will get back to you as soon as we can. Thank you very much. Have a wonderful day, everyone.